James Morton joins us now. He is Chief Investment Officer at Santa Lucia Asset Management. Great to have you with us in the studios, James. Just unpacking everything that's happened in the past few days. Rapid collapse, but also regulators stepping in very quickly. What is your assessment of how U.S. authorities have responded to this crisis?
Well, significantly faster and much better than the last one. And so it does look like there have been some lessons learned and some plans have been put in place to take action quickly if something like this were to happen again. And so I think it's very important to start off by saying this is not a Lehman moment. And there's two huge differences between this bank and Lehman. First, Lehman was strategically integrated with the interbank market and had massive derivatives, something like 27 times its capital base. It was an incredibly complicated situation and nobody really knew what was what. This is a much more straightforward situation. And the real problem here has been duration mismatch, as you said in your introduction. You know, short-term deposits, long-term assets, and that doesn't work very well if it's a problem. So the other thing to say is this bank was a very specific bank, and it's a tragedy, actually, because this bank was playing a very constructive role in the venture capital industry, and the venture capital industry will miss it.
Okay, what is your sense of, given that there's so much focus on how the Federal Reserve's rate hikes might have prompted what situation we're seeing with SVB and its collapse, do you think in some ways we will see the U.S. central bank think twice about its aggressive pace of tightening, given the fallout that it's obviously causing for tech and, in some ways, banking?
Yes, so this is not one of the factors that Mr. Powell said he's thinking about, but he probably is thinking about it nonetheless. It would be prudent for him to slow down and take at least a pause. I mean, the problem with his interest rate policy is that he started way behind the curve. You know, we were telling our clients in early 2021 that he needed to start raising rates, which he obviously didn't for a long time after that, and then he's had to move faster than would be desirable. I would say that he will still raise rates. I think he has to, because of his focus is not on Silicon Valley Bank, and they got themselves into their own mess. Yes, he contributed to it in the environment that he created, but it certainly wasn't his fault. That was the fault of the bank's risk management committee and the CEO's strategy. And what we do need to be concerned about, and I think Janet Yellen has shown that she's thinking about this already, is there are 5,000 other sort of mid-small banks in the US that some of whom may have adopted a similar strategy to make sure their net interest margin was positive.
What is your sense of when we look at the startup sector and the tech scene in the US, do you think investors from here on out are going to demand higher risk premiums? Are they going to want to see these growth firms achieving profitability much earlier than they used to have a tolerance for?
Well, I hope not. I mean, venture capital is a seriously creative sector in the financial industry, and it needs support, and it's the future. And this is a completely different industry than private equity, most of which, I'm sorry to say, are a bunch of locusts. Private equity, that's one thing. Venture capital, it's creative, it's startup, it's employment, it's improving services, it's improving products, it needs support. Now, as to your question about valuation, that's already happening. You know, values have come down. We won't see too many unicorns hitting the public market in the foreseeable future. People with their venture capital portfolios need to expect valuation markdowns for the next 12 months. But there's an enormous amount of unused firepower, hopefully not too much of it at Silicon Valley Bank, that can be deployed and I think will be deployed. And we need to encourage venture capital and continue to give it support and even tax breaks, because that's the future of a better life for everybody on the planet.
Okay, yet it has also exposed these vulnerabilities in the banking sector, this whole saga. What do you think the fallout, if we should be looking at any, will be for the Asia Pacific?
You know, I don't think the Asia Pacific should be too fussed about this, really. There's very little spillover effect. Counterparty risk here should be minimal. I would say in China, for example, the regulator is actually more on top of the banks. And this would not have occurred in China, or if it did, as it did in a case of a regional bank a couple of years ago, the regulator stepped in very early The last time I saw a bank run, by the way, was Myanmar in about 2006, I think it was. The bank was called Endless Prosperity. It was interesting to see people lined up in the streets. Now, of course, it's all online, and then the server crashes. So the definition of a bank crash has changed a bit.
Right, digital space really changing the game. But, you mentioned China. We also see how policy continuity and leadership continuity seems to be the name of the game right now, given we still have Yi Gang as the PBOC governor. What sort of regulatory environment and framework do you think we're going to see out of China moving forward?
Yes, and that was a big surprise, and I would say a positive surprise. I think it's good to see some continuity amongst the top officials, particularly those who've demonstrated that they do understand what they're doing. I mean, it's always a bit scary when you see political appointments of people who obviously aren't qualified and don't have expertise or experience in the industries they're put in charge of. So to see a key player in the financial markets in China, who everyone thought was going to be retired or removed, continuing, I think that's a very, very positive step in the reorganization of the top positions in China.
James, great to have you on with us on a day like today to unpack all these stories in the financial markets. James Morton is Chief Investment Officer at Santa Lucia Asset Management.